Good morning. We will pay attention to the periodic inventory system today. When the periodic inventory system is used, no entry is recorded in the inventory account during the financial year, and there are no cost of sales account. So the balance in the inventory account of the inventory that was left over at the end of the previous year will stay in that account until the end of the financial year. You are not allowed to write in that inventory account during the financial year. Periodic means that it's not done on a frequent or a continuous basis. When the periodic inventory system is used, entities do not record movements of inventory on a continuous basis. So they don't record the inventory that was sold or the inventory that was purchased in the inventory account. It is recorded in different accounts. The balance of the inventory account on the first day of the financial year will remain in the account until the last day of the financial year. Therefore, the inventory account doesn't reflect the inventory that you have at the end of the year. When the periodic system is used, the inventory balance is only calculated at the end of the financial year with a physical inventory count. So you can never determine during the year what is the value of inventory available because you don't write in the inventory account. So you can't balance the inventory account to determine how much inventory should be in the business. If you want to know how much inventory you have to do a physical inventory count. The total of the inventory count at the end of the financial year will be balanced in the inventory account that will be reflected as the asset inventory in the balance sheet. So at the end of the year, the balance that we had in the inventory account at the beginning of the year will be closed off to the trading account, and you will create a new asset for inventory with the balance of the inventory that's available at the end of the year. Goods purchased for cash will be recorded as purchases and not as inventory, and we will credit our bank account. When goods are purchased on credit, again we will debit the purchases account because we don't write in the inventory account, and we will credit creditors control. Goods sold for cash, the bank is debited, sales is credited, no entry is recorded for cost of sales or for inventory. Goods sold on credit, the debtors control account is debited, sales is credited, no entry for cost of sales. Goods returned to creditors will reduce the creditors control on the debit side, and you will credit creditors allowances account. So because we don't record the goods that we return in the inventory account, we have to create a ledger account where we can show this, and this creditors allowances will actually reduce your purchases at the end of the year. Pay attention to this creditors allowances account because in the perpetual system we don't have a creditors allowances account. Both systems use a creditors allowances journal, but in the perpetual system you will credit inventory when you return goods to the suppliers. In the periodic system you will credit creditors allowances. Goods returned by debtors. The debtors allowances will be debited and debtors control will be credited, no entry for cost of sales or inventory. When inventory is donated, it means that we create an expense for donation, and we have to show that the expense for purchases must now reduce because these goods will not be sold to make a profit. So when we buy goods, we debit purchases. If we use goods for another purpose and not for making a profit, you have to reduce the expense for purchases. When expenses are paid when goods are purchased, for instance, import duties, carriage on purchases, you will open a carriage on purchases account or an import duties account, and you will debit the expense and credit the bank account or creditors control if you don't pay for it immediately.